Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market gained modestly this week, again with buying coming in daily, despite overnight selling squalls, of course, on news coming out of, well, especially the area of tariffs. Investors clearly have a mind to ignore any of the possible negatives out there, and some of the market leaders have gone flat, like Apple and Amazon and Google, just chopping around, and Netflix, and another one of those FANG stocks, getting hammered on its earnings reports. But the beaten up groups are being rotated into now, with those then taking the lead. The financials, we expected those to be leaders in the next market rally, and we are seeing that as the XLF index has been moving up nicely, and the airlines have started to move up, as United Airlines had some excellent earnings. I'm going to show you that chart a little bit later on. The low caps, they keep overperforming, and even after an occasional day of rest or pullback in the Russell, we do get another big up day, and that was a good performer for this week. POTUS, he had a rough week. He visited with Putin, and he's taking a lot of heat from both sides of the aisle based on that meeting. And then he seems to want to be showing toughness and threatening tariffs on some $500 billion of goods that are imported from China into the U.S. There is some concern that this trade war is going to turn into a currency war, as we have China seemingly doing what they can to lower the value of the Chinese yuan. Of course, the lower the yuan gets, the more that defeats the tariffs as their goods become cheaper to the rest of the world. And so after Powell's testimony this week to Congress, which essentially he said all is well, even with rates going up, President Trump came out beating on Powell and the Fed, essentially saying that, well, he doesn't want rates to be going up. Well, of course he doesn't, because if rates go up, then the dollar goes up, and the disparity between the dollar and the Chinese yuan gets even bigger, and that keeps defeating the whole thing about the tariffs. So that's why you might hear him this week talking about the Fed, and all kinds of conversations about the Fed losing their independence, which isn't likely. Well, I'd rather they completely lost it and just disappeared, but that isn't likely to happen at this time, and so that's probably just talk. And the dollar actually had a bad day on Friday based on all of this conversation. There is a huge disparity going on right now. The messages out of the commodity markets and the performance of the stock market. Commodities getting cremated in most areas, and of course stocks moving up, and some indexes making new highs. The base metals, as measured by the DBB index, which is aluminum, copper, and zinc, is down 18.6% from its high this year, being led to the downside by copper. Copper weakness is often a sign of coming weakness in world economies. So that seems to be a warning, at least, coming out now of the commodity markets, but the disparity really continues. Of course, part of that is from the stronger dollar, and part of that, of course, is fear that all of the situation of tariffs trade war, currency war, whatever it might be that lingers out there, might actually bring problems in the economies. Our work shows more upside for the stock market as we got past the real bad period of risk, and maybe even testing for the S&P 500, the all-time high at 2872. We'll call this rally that we're in the Wile E. Coyote rally. Essentially, we think it's the last one before we get into some major corrective period. And investors, or the stock market, if you believe it has a consciousness, doesn't quite know that it's running off the cliff right now as it's moving out there and pretty soon to be standing out there holding in midair, waiting to, well, drop quite quickly. The Wile E. Coyote market. Beep, beep. Let's look at our 60-minute chart of the S&P 500 so we can see what happened during this week. This is the gray area, which is our overnight trading, and the white area is the pit trading. And you can see here on Friday, we had oil moving down big. It has moved down pretty consistently. And Mnuchin came out and he said that some importers may actually get a waiver on Iran oil, and oil stocks came down, and that weighed on the market early. But you're going to see here, like on Monday, where you had this midday rally, every single day brought buyers, and some of them pretty significant at some point. All of those days moving sharply higher. What hurt on Tuesday was the Netflix earnings. Netflix was down 13% at its worst level as it had a miss on subgrowth. I will show you that chart. And then on Tuesday, we were waiting for the semi-annual testimony, used to be called Humphrey Hawkins, for the Fed chair in front of Congress, and he essentially came out, as they always do, with rosy comments, several years of strong growth, low inflation coming, and interest rates likely moving steadily upward. Of course, the market would not be afraid of rising interest rates if economic growth was strong, but economic growth is weakening, so you really have to wonder about, especially with the tariff situation. But look what happened here. That Netflix decline disappeared quickly, and this rally was absolutely massive, and there was nary a downtick in there during that whole period, as you saw S&Ps move up from 2790 all the way up here to about 2817. So that was a pretty steady upside move that you see in there. Wednesday, strong earnings from the banks and the airlines lifted stocks. So while there was a bit of a dip overnight, they came right back and you had a nice rally there. Here's where we got some action on the downside here, as you had the yuan get very weak, and now we're at a 2-year low in there, and the dollar got stronger, and gold got hit hard. You had this big decline right over here. Then Kudlow came out and he said China has no intention of making any trade deal, and the ball is in their court essentially. So it continued on the downside. You had that midday rally, and then here on Friday you can see how choppy it was overnight. POTUS came out with that threat of $500 billion more in China tariffs, and also more threats on the Eurozone on auto tariffs. Eurozone fighting back hard on that one and trying to present it. You had a couple of pretty good down waves overnight here in the S&P 500 and all of the indexes, of course. And then when we come in, the buyers just simply love the market and come in and push the market back to the plus side, though right now, as we are just about a little over 2 hours left in the trading session, the S&P 500 future is about unchanged on the day. So you could see there was some pretty good movement here during the day, and each day those buyers just seem to come in, as the investors are certainly able to look well past anything that they see going on negative in the market, and seeing it all as a buying opportunity as the upward momentum continues. We'll see how long that lasts. I think it's got some number of weeks out there, and then trouble. Stock market for the week, major indexes slightly up. The big gainer was the Russell, up about 1% on the week. Bond market loses 1.25 points. 10-year is up about 4 basis points. The long end of the curve widened out a little bit as we're close to 14 basis points on that 10 to 30-year yield curve. The dollar moved up sharply early in the week and then sold off late in the week, and that's based on really the president's attack on the Fed, and we saw it move down pretty sharply against the yen. Also, comments about that there may be policy change coming in Japan. We've talked a lot about that had to happen, and that at some point we're going to see the dollar weaken very significantly against the yen, and this actually could be the beginning of it starting right now. Gold, well, Friday brought a rebound, but it was still down on the week, some $12, as gold remains in a very weak pattern. And oil down $1.30 on the week, on showing that basically supply concerns were wrong. And late in the week, the Saudis came out and said, well, we're not going to flood the market with oil. That's really the fear, that they're going to compensate for any disruptions or Iran oil that's cut off the market. So that we think oil's made a major top. If you watch our Future Speak show, we showed in there how the products, the gasoline market, heating oil market, had signaled that there was a failure coming. That's an important video to watch, and you'll see the breakdowns that we think are going on in there. And there could be a long trip coming for the energies on the downside. So you'll want to watch our Future Speak shows on Wednesdays in order to get a feel for that. That is the opening segment for today, and we're going to be right back, and I'm going to show you a little different look of the best and worst stocks for the week. All right, for the best of the week, we're going to take a little different look here, as I'm going to actually show you the watch list that I look at on a regular basis. That kind of tells me what are the best stocks for the week and what are the stocks that have had the biggest movers to the downside for the week. So let me just get this tuned up here for you to see. And there you go. You can see that right there. That is the stocks that are on the left, the watch list that shows you the best stocks for the week. And we're going to flip that over in a moment and show you the worst for the week. So let's just switch over here to CLF, which is the stock that was the biggest gainer for the week. You can see it's up 20% on the week, and I'm going to blow this up. You could see that that was the weekly and the daily charts, and now we're just going to focus in on the weekly charts. You can see a beautiful pattern in here, as this is one of the stocks that's really bucking the trend of weaker commodities that we have had, and their earnings came out great, a big update here on Friday, and we have this type of a pattern going on. You see the big decline right in here, and then the base built, and then the positively configured cycle, which says you're going to move to a new high. You did, and then another new high, and you did. This is the fib target zone right up over there. So our work, which has said that it was going to be one of the best stocks for the year, you can see right here it's on our list of best for the year, has it projected here to get up into this target zone, with this area up near 11 as a reasonable spot to believe it's going to move up to. And you can see on the bottom are the cycle brackets, which are our guides to the repeating rhythms that we see here in this market. So Cliffs, the biggest mover for the week, and a great pattern. The question is, will FCX follow? It's down 5% on the week. Its earnings are on 725. And that looks to us like it's got, well, another couple of weeks of downside risk in there. And so consider FCX as a stock that may also overperform. Take a look now. You can see I'm highlighting Cliffs here. I'm going to click on United Airlines right over there, and it's going to load up that chart. And that's one of the great features of the linkage here on the Thinkorswim charts. And we'll just take a peek in here, and you could see also positive cycle patterns. We note here that this is a bullish positive configuration and right-hand translation. For those of you that are cycle analysts, you'll know what that means. That signaled a positive rally was coming. We talked about United as being one of the best stocks in the group, and sure enough, it had a monstrous movement here, moving up from below $68 all the way up this week to near $81, or about just above it. So it gets up into the target zone. We have an upside objective in here of close to $84 over these next several weeks, and it could even do better than that. So that's a very good move. We're not going to look at everything in here. You could see Petrobras up almost 8%, Taiwan Semiconductor up about 7%. You can take a look at those, but this is how this is all filtered in here. We're going to take a look at Chessie, CSX, or CSX Railroad as they call it. We call it Chessie when we were down on the floor. And you can see here, this is another very positive pattern, as this is one of those cycles that moved up for about 90% of the cycle time and corrected for 10%. When that happens, you get this shape, and that's called a right-hand translation, which is positive, and then you move to a new high. This is the corrective period, this is the rising period, and you could see a very sharp move in there. Based on these channels that we see in here, I mean, it's very reasonable to see this stock moving up to the 75 area. This is only the third week of this advance, and you could see they tend to last much longer than that. So this is a powerful pattern that we're looking in there. You can see we had some strength in here in Kohl's and Macy's, Abercrombie. They were rebounding in there. Let's take a look at Macy's. That one is a stock that has been moving up. The reason I want to look at that is because we see it got support right in that support zone, but the pattern in here is suggestive that it is not going to be able to hold, and that maybe it's got 40 to 41 in there, but then we think it's going to roll over and get into another corrective period. Whenever you get into these nested periods, like you could see right here and right here and right here, it's hard to get upside moves, so that's why we don't think that that one's going to last. Abercrombie is another one we want to look at, and they're up about 5% on the week, and we want to show you this because this one is also in a similar type formation, where we think that because the cycle gave up so much ground in this corrective phase right over here, where that steep decline says to us that it takes a lot of energy to get back up here. So we're looking for potentially a double top, maybe get up to the 29 area right there, but then we think it comes back down into this corrective period. So we are not favorable on these big box stocks that we see right over here, and we think that those are likely to move down. Not a lot of great stuff that we saw here on the upside for the week. Of course, it was not really much of an up week, and it's really basically around the earnings reports that we're seeing things going on. So that's the best for the week. We're going to go right now to the worst stocks for the week. All right, for the worst stocks for the week, we're going to take a look here at the biggest move to the downside that I've seen in quite a while, and that's in Skechers. Skechers is the worst losing stock for the week. There's a number of stocks that have had bad moves based on earnings reports, but take a look right here. You will see, and you can see on the left, that Skechers is down 18.5% on the week right now. Alcoa is down 14. AG, the silver stock, is down about 13. I don't really look much at Chesapeake anymore because it's a very broken company. And you can see Netflix and eBay, big decliners. They're down on the week, and some of the drillers having some good downside moves also. Take a look, though, at this Skechers pattern right over here, and you can see it made a major top right there. And it got up to these kind of low fib extension numbers and then failed. Once it gets underneath this low right over here, so this is your cycle low, there's your cycle rally. Once it breaks that cycle low, it puts it in trouble through the next cycle period right over here. Then it rallied, as it should have, right in here. It gets into where we have a sell zone. That sell zone is based on what we call swing high, swing low analysis, and it was spot on. You could see it trades right up to 34 and then collapses after that. And now essentially what it's done is let me just grab this line right over here. It has broken underneath that significant low, and when it does that, it tells us that it's going to move down for a long period of time, just as it did right over here. It fell then for about 2 months. Here we have a projected low based on time in the early part of October. So what's the probabilities of getting any rally that holds? It's really small. Their earnings missed very significantly, and their guidance is much weaker, and analysts are downgrading this stock like crazy. So this is the fib extension zone. We're seeing it below $21 based on what we see as that target zone. We think this is a very broken stock. In my history, I've seen some companies that have been in the shoe business that have really hit the skids and never been able to recover, and this is just one of those that looks like it's really finished and has a long time ahead of it before it can fix this company. Next one we will look at is Alcoa. Alcoa is right over here, and you could see this stock moves down about 14%. Right there, as its earnings did not keep anybody happy, and it's gotten down to this cycle low support right over here, but it even looks like it's going to go lower. We see another 3-4 weeks of potential decline in there. AG down 13%, and you can see that this looks like a major top. We're looking for a decline down to about $6 near that. That's a very weak stock that we see in there, and a very bad pattern. It really looks top to us as you see that. And this was on our list of best for the year, and it's given up its gains for the year. We don't really like to see that. Let's take a look at Netflix as I click on it over here, and it loads up right there. It's on our riskiest for the year list, which has been incredibly wrong because the stock has been a double for the year until this last couple of weeks when it's moved down. Now, their earnings beat, but their sub-growth missed, and with a huge valuation like this, there is no room for error. And you can see now we have a couple of different scenarios in here. One is bad, one's really bad, and what it says to us is that if there are potential rallies, we think that they're going to fail. Both of these cycles may come into play, so we see a decline into mid-August, a potential rally, and then another decline way out over here that takes you into October or towards the end of the year. We think this is a major top forming. You've got a little double top in there, and we think Netflix is in a lot of trouble, and their growth is behind it. Not a lot of room for error, as we see right there. The next thing we're going to look at is we had a pretty good move down here in eBay. You could see that right here. This we think is a broken stock. This breaks underneath this significant low after giving you a major top that formed in there. You can see this rally right there, this decline that gives the whole thing up. That's this cycle right in here. A rally that fails and then breaks that low. This points to a decline all the way out till late October. We think that the growth is well behind this stock. Drillers, let's take a look at Diamond Offshore. This looks like it's got about another month of correction, and then it gets down to the support area. You see the 34-week moving average, that 50% number right there. At about under 18, we think it's probably a buy, and you could see our upside projection in that also. Noble Corp, similar, you could see that right in there, as we think that's the buy zone coming in. It would have to get under 5.5 in about the next month to get into that support buy zone right over there, and that is a look at the drillers that we think are basically in some decent shape after they finish this correction. The last thing we'll talk about is State Street. They're buying Charles River Systems, and the stock moves down about 6%. That's STT. And that's the worst looking of all the money managers right now. Goldman Sachs, Morgan Stanley, JP Morgan, they're all in bounces right now. But this one, because of the buyout, moved to the downside. And we actually think that there's more to go on the bounces for the other investment banks. But that's just a bounce, and that we're going to see lower prices in that group as we move to later in the year. That's it for the best and worst stocks for the week, and we're going to be back in a second with our short-term view for the coming week. All right, short-term view for the coming week. Do this every single week where we take a look at the stocks that have the futures in the 5 different categories that we look at. We're going to do this a little bit differently. First of all, I want to remind you to follow me on Twitter at askSlim and become a subscriber on our YouTube channel. You like this video, give me a thumbs up. We've got some special little peek at our member charts coming up when we do our short-term view for the stock market. And I think you're going to find it fascinating because I'm going to show you all of our charts that we look at and all of the studies that our members get for a level 4 membership. So I think you're going to find those just absolutely fascinating. We're going to give ourselves about a 60% for this week. The cycle patterns that we look at really did very well. The levels that we look at, we weren't that great on because some things fell harder than we thought was going to happen. That's especially true in light crude. So expectations of patterns correct. Some of the dips were just bigger. Take a look here at the light crude market, and this is an example of that. Now, I did a special here, and you could see these yellow ovals. Those yellow ovals are telling us about periods that are likely to have declines. They're in these nested areas where these bottoms are coming in together, 1, 2, 3, and here's another one right over here. So we believe this rally is fake right there. We thought that it would dip down and then bounce. It's exactly the pattern we expected. However, the decline was bigger, much bigger. And now it gets up here and is bouncing toward the sell zone, and you can see starting to reject. We expect the pattern. My notes always have arrows drawn on them, and my arrows look like this. And it says that, well, we might be able to test the area of 69 to 69.95. That's right in here. Now, the dollar is weaker right now and is likely to have some trouble this week. That could help it get into this sell zone. If it wasn't for what looks like a little weaker dollar, I would not expect 69.95 up there. But that could still happen, and now we're looking for that to get into that pink area, or maybe test the darker pink or red area, and then fall after that. And that's why we call that the sell zone. That's where we want to look for it to start moving and then not be able to continue in there. Momentum is just turning negative right now, as you can see, and when momentum turns negative, there's a high probability that rallies will fail and the movement will move to the downside. So light crude, we're going to look for test of the sell zone and then move down. If that's the case, it should be a relatively small week, right? Because it would get up into here, it would roll over into here, and it wouldn't change much. But after that, the following week is when there's more risk. So we see the not this week as a big risk, but the following week as the week with the bigger risk. Now let's take a look at the dollar. That's $DXY. You can see that right in here. Now look at the big down day that you're getting right in there. Well, the big down day is because you have the president yelling at the Fed because he doesn't want the Fed to raise rates because it makes the dollar strong. And like I said earlier in the show, it puts separation between the valuation of the Chinese yuan and the dollar, which defeats the tariffs and That's pretty complex, but that's where we are, and that's why we have a move down. So we're expecting that this short-term 78.6% will get tested. If it breaks below this level right over here at 93.71, that will be sending quite a negative message for the intermediate term. We don't expect that to happen, but based on the fact that there is still time for this to decline, we have to call the risk. We're going to look for a move down here to about the area of 94.16, we'll call it, and then getting below that minor support zone that it's come to right now, and not doing much worse than that. We're going to call for the pattern to hold, because we think it's very early for a breakdown. If it happens, well, we're going to call it. Right now you can see momentum remains up, but it's kind of flattish. It's not all that strong. So we're going to call for a slightly down week for the dollar in here. The opposite of that would be a slightly up week for the euro currency. And we expected the euro to come down right over here and then start to bounce. And it did it about a day earlier than we expected. So here is the number that we're looking for, about 118.50, 53, something like that. And we think that that's a likelihood this week. If it breaks through there, it could then get up into these resistance confluences up there, the 89-day moving average in the 119. So that would be a positive short-term breakout if it got above that level. And we think it's going to threaten the breakout. And again, because all of this talk that will affect the dollar in a negative way. We'll see if the president continues his tweet storm on that. That's going on right now. So we're in a slight bottoming period. You could see in there a minor upward trend as you see this going on right over here, and that we expect to stay in that based on these cycle formations that we're seeing there. So that is a look at the dollar and the euro currency, which basically followed what we were looking for. The gold market also followed what we were looking for this week. As we talked about, it would likely be choppy and then fail from near 12.54. It actually got only up to about 12.49 right up over there and then failed. And that was moving down even sharper than we expected. Oil did that, and the gold market did that, and basically followed the pattern. We thought the risk was to the downside. We thought it would be a small down week. Well, it's about a $12 or $11 down week. So it's, I would say it's in line with what we expected. So right now, you could see this minor declining resistance right over there. Because of what we see as the shape of the dollar pattern, we think it's going to get into there. So that it's not a big rally at all, really. It's 12.39 up to about 12. It's 12.39 up to about 12.50. We'll call it right up into that area. We expect that it's going to get into there and not be able to continue. And then you can see all of these nested areas where the cycle brackets are coming in there. We kind of expect that it's going to get back down to that 12.10 area in that period. So because of the soft dollar we think we're going to see this week, we see it getting up to here and then coming down, testing this level, and then getting another rally like that. That's about 3 weeks out that we're projecting that. So we're going to call this a small week also. When we call it a small week, it's because we think it's going to come up, test that, and then move down over here. So it doesn't leave, it's kind of getting squeezed between that softer dollar and the resistance zone that's coming down. So we think it's overall going to be a small week. The bond market, ZB, is giving signs of an intermediate top. Now, we expected that this week it would test the bottom of the slim ribbon. So we were looking for a down week. And you see we have that in here, but it's gotten weaker. Not only did it test the bottom of the slim ribbon, which is now, you see that little blue arrow? It's kind of hard to see. We lost the upward momentum that we've had since here. So all of this rally came on upward momentum. It's now turned neutral. Also, you've broken this cycle low here. This is an indication of an intermediate top, the way we've done that timing-wise. That leaves about 3 or 4 days on the downside here, probably testing that support area right there. We'll call that 143.19 and then getting a rally. So we're looking for a down week, but maybe a small down week as it comes down into here and then gets a bit of a bounce. This, of course, this big down week, result of the president really trying to keep the interest rate market from going up in a significant way because he just does not want a strong dollar anymore. So he wants a strong economy, and that's certainly so. And he's doing what he can, but he's not really getting it based on the policies that he put in place, especially at interest rates at these levels. The other side of that is that the combination of China wanting lower rates and the threat of the greater effect of the trade war being on China, a more negative effect on them, that's pushing down the yuan. And the president just does not want that to happen. So we're going to hear a lot of rhetoric about that. So that's the first four of the markets that we look at in the short-term view. We're going to look at the stock market a little differently right now, as I bring you a special which includes our short-term view and longer-term view and a peek at what our member charts look like. So you want to know about the stock market this week or a bigger picture, take a look at this. All right, we're going to look at the stock indexes today, a bit different than we ever do in the Market Week show. I'm going to show you what our members see. That's our level 4 members that get our charts. And of course, we do a similar type of expanded view in Future Speak on Wednesdays. But I wanted to be able to demonstrate this to you because our level 4 members get not only our stock indexes, but 6 different segments of the futures market with these type of charts. This can be a lot different than some of you people that are level 1 members or people that are not yet part of the askSlim family, seeing as we demonstrate these charts as far as the studies that we look at, well, many studies that are only proprietary for our members. So take a look at this. You're going to see a weekly chart here that's a bit different from what I've shown you before. Here is a big picture analysis there. You'll see that gray box in there that's visible to our members, and that has all of our momentum and our cycle trends in there that they could see, plus the market condition indicator and option bias indicator, MCI and OBI. So that's on the weekly chart on the 3 indexes that we cover, the S&P 500, the NASDAQ, and the Russell. So we're looking at the NASDAQ right here. I'm going to go back 4 charts, and you can see me scrolling at the top, and you can see there's the S&P 500. So I'm going to go through this and give you a sense for what's on these charts, what the analysis is, and a bigger picture. And of course, we'll take a look at the short-term view for the coming week, which is what we normally do right at this time. So I'm going to just take a zoom in right here, take a closer look, and you can see this is the weekly cycle analysis in there. And what we had in there, if you remember, is we had projected that there was a low due in about the 2nd week of July. That would be the July trough. And we had expected that this period of risk would bring a sizable decline. Well, it brought 100 points in the S&Ps, not very much, and we expected it to be significantly more than that. You can see it hit that support zone in week 20. That's pretty significant because you could see that there are similar cycle lengths right in here. You could see week 20 here, week 20 here, and this one, as it had a massive decline, was quite a bit longer of a cycle at that point. So here we are right now in 3 weeks into this rise, and with you can see that green Hull moving average right there turning up. So that gives us a sense that we are in a period of positive momentum. So that's the weekly pattern, and you can see there as I blow it up, 3 weeks up. So we're going to advance now to the daily chart. Now normally you see our daily chart with momentum in there. This one does not have momentum because we've broken it out and put that in the next chart. But still, you could see our daily cycle analysis in here, and what we are projecting for the next week is pretty similar to what we had last week, whereas we expected a decline down to that 23%. You could see it didn't quite make it, and then we think it'll touch that. That's about 27.85, and then moving back to the upside. Now, what I want to show you on the bottom in here is our market condition indicator, and I'm sorry, the option bias indicator. And you can see all these green dots right over here, and then it went to yellow right at that point. That essentially is showing you that, well, this was a period of great strength right over here, and you can see it hardly could tick down. And here is a period of strength and slightly overbought condition right in here. As you can see, it's starting to move sideways and chop. So there was a little neutral period right in here, and when you get a market correction and it only goes neutral, it shows you the kind of strength that's in there in the option bias indicator. Now, this also gives us readings that are that tell us when it's extreme overbought or oversold. There happens to not be one on here, but I'll show you one in a moment. This is our page that has our momentum readings on it for the daily charts. It also, what that's made up of is the askSlim, the slim ribbons right in here in an area chart, the projection oscillator that gives us buys and sells and confirmation of momentum, and this is TDA's proprietary index, the market forecast, and you could see it's giving us a top warning right during this period right over here. You don't get a lot of those kind of readings, and at this point you could see momentum is positive. And when you have positive momentum and the internals correcting, the projection oscillator comes down and you get a buy pending right over there. Once this turns up, you'll have a buy signal, as you did right over here. And you could see that gave you a pretty good rally right at that point. So extremely valuable information here for directing your positions. That is the slim ribbon, which anybody can put that on their system, but as far as putting the other proprietary indicators we have, well, you need to have these charts. And one of those proprietary indicators is the market condition indicator, the askSlim MCI. And that's included on 2-hour charts. And you can see right over here, askSlim MCI. The way this works is, well, it tells you when it's really strong or really weak, if it's down here near minus 100. And also when it comes into the swing zone between the plus and minus 25, and then tests that area and comes out of it, it's a positive signal. So you could see how good that was, as the S&P 500, of course, has been moving up on this 2-hour chart pretty consistently. Also, what we have on here is the slim ribbon on the 2-hour chart. And when you get the slim ribbon turning up to positive momentum and you break the range, and these are range lines right over here, that gives you a positive warning. And you could see between this MCI and this positive warning here, it was a great signal as the market continues to go up. It's one of the reasons why we we started to believe that the market correction was ending. So that is a 2-hour chart with our proprietary MCI on there, and a great way to read. Also, you could see the buy signals that occurred here as the projection oscillator tested and then turned up during a period of positive momentum read by the slim ribbon. So you could see that positive period, buy signal here, a good upward surge, buy signal here, a good upward surge. Here you're starting to get some erosion right over here, but we haven't lost the upward momentum yet. So that gives us a little sense of caution, but not much, that there might be some topping going on. So that is a look at the 4 charts that are included. I'll go back. You could see the weekly, the daily, which tells us we're going to slip down to that 23% and then rally, the positive momentums, and buy. We have a conflict right over here with the top pending and the buy warning. You can see that. So maybe the next rally isn't going to be that strong. We'll have to see how that reads out, but there's a bit of a warning there. And then, of course, the 2-hour readings and the market condition indicator. That is some pretty advanced information. We have that, as I said, on the NASDAQ and on the Russell. hassle, and you can, of course, have all of that, which our Level 4 members have by becoming a Level 4 member. These charts are available on the Thinkorswim platform only, so if you're not a Thinkorswim, if you don't have an account there, then you certainly, it would be beneficial to open one. Thinkorswim or TDA is our favorite broker, so and you can see we do all of this work on their chart. So members of Level 4 get 6 grids. You'll be getting these 6 sectors of the market. That's energy, foreign exchange, all those currencies, the metals, the treasuries, the grains and softs, and the stock indexes, as you just saw. So you can actually test this out. And we offer for all of our premium memberships half-price trials for 1 month. In the case of this one, if you want to get these charts on your platform, test it out, you can just send me an email to slim@askSlim.com, and you will get all of these charts. That's 24 different indexes, plus we also give a little bonus of the TNX, the 10-year yield. So a lot of unbelievable information in there for investors all the way down to shorter term traders. You will also get our Level 3 rankings and trade setups with just an easy to read table that shows you our 80 best traded symbols, plus over 300 videos that are just about everything you could possibly want to know about technical analysis, trading psychology, the trading style, and just so much more. Also, of course, all of those include our stock index report. It's like all of this information I just gave you culled onto a couple of pages with all of that momentum, and that is a great summary which comes out once a week and twice if actually we need to do an update on there. That's an amazing amount of information that you're going to get, and all of that you could have for half price. All you have to do is write me slim@askSlim.com, and I will send you that special link. If you don't have Thinkorswim charts and you want to get Level 3 down, I have a special link for Level 3 also, so you can write me for that. slim@askSlim.com. That is our short-term view of the stock indexes, well, expanded short-term view, and I'll be right back. So the last thing that I want to say about the stock index report is that a lot of people ask us how you can be part of the askSlim family to support all the work that we do. We have many people that work on the team: social media person that puts stuff out in the morning, an assistant analyst, a business manager working on all the new products that you see, and of course support in the developmental team. So it takes a lot of work and a lot of people to put out everything that we put out here. So if you want to support us, you can just subscribe to the stock index report. We're putting more and more things in there. It's an amazing way to see market condition for the stock indexes and get a picture of the analysis that we do. We put that out on Thursdays and then update it often on the weekends depending on how markets move. So if you're not interested in anything else we just talked about, if you want to sign up for that, that'll help support us. $19 a month, $57 for 3 months. That is still the entry level on that. We're going to be raising the price on that, so you can get in grandfathered on that price and lock that in. Subscribe for the stock index report for only $19 a month. Go to the front of the website and then just click on that SIR, stock index report, and sign up. Help us with that. That is everything for this show, Ask Slim Market Week. I hope you found some good information in there, something that helps you understand the markets more, or something that is an opportunity that you see. I want you to be so careful because it is so crazy out there. And we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been